the Bitcoin maxis are all over Twitter trying to convince everybody, hey, this is why we told you, not your keys, not your Bitcoin, so let me tell everybody, right? 30% of all the Bitcoin is gone because of the Bitcoin maxis, because they told you to hold your own keys. And then everybody lost their keys.
And this is a prime example of don't listen to anybody in the space. You can custody your own crypto, but don't trust anybody in the space. This is Alex Mersinski. Note the date, May 16th of last year. And he's trying to tell you, yeah, let me hold your crypto and don't listen to the Bitcoin maxis. And you see how that played out. The Bitcoin bros have been telling you guys time and time again, get yourself a hardware wallet, be your own bank, get yourself some cold storage, and self-custody your crypto. If you don't know how to do it, there's tons of information on the internet, on YouTube, tons of tutorials. You can check it out, be your own bank, and don't rely on these guys that sit there and lie to you and will be like, oh yeah, your crypto's safe with us. Celsius, FTX, it's all the same story. So the moral of the story is not your keys, not your crypto. And with that, what's happening, crypto crew? Sean's coming back at you, another cryptocurrency video. Getting straight to it, we're taking a look at the Bitcoin price chart. At the current time it's recording, we're right below 17,000 at 16.8. And what the Super Guppy's showing us is that we are definitely in a bear market, but let's look at past history, past trends, and see how long that these cycles have lasted as far as the bear trend. So you have to look and see when the blue area starts, and then when the red area starts. And you see we had about 329 days of just colorful area, a few gray areas. If we look at the gray area, we can see that this started, roughly 91 days. And you can look at this and say before we got back into it, another 70 days. So you got 91 days of gray area from when we had this macro blow off top. If you would have just sold right here, you said, oh yeah, it looks like we went to the gray area, and you sold right here at $390 and waited a little bit, you could have easily over doubled your money. Or it went down even farther, you get the picture. But if you just use this indicator to see how long that these trends last, let's zoom into the next area, which is after the 2017 peak, and see how long each one of these lasts. We can compare these and get some data. So this blue area lasted 84 days, and the red area lasted 63 days. Then we had some gray area, and the gray area lasted roughly 150 days, and then another about 21 days. So a lot different than the first. So we got 154, and then the colored areas is 84 and 63, where before, if we zoom into the 2015 bear market, you're looking at 391 and 329 days. So, definitely a big difference. And let's just compare 2015 where we currently are right now at the current time this recording. Let's see, we did get some gray area here, and that gray area lasted for a little bit of time, and we could see it lasted for about 105 days. And then the blue area, we had about, it's actually still going. So this is a little unique. The blue area is blended. The blue area is blended with the red area. So, we're still ongoing into the blue area. We had some grays in between, but 224 days. So this is definitely a different bear cycle. But all in all, we're just showing you this. There's no correlation with these numbers. So you can't really say, oh yeah, it's going to be so many days. No, that's not the case. You can see here that this is a good indicator, to see when we are definitely in bear markets and bull markets. One thing that is consistent, after every blow off top, we did have a gray area. Once the gray plays out, then that this was the peak. And then we go into a bear market. And look at rinse, repeat, gray area, gray area. It never fails. We wanted to share this with you and let you know how you can use the Super Guppy moving forward in your crypto journey. What we're going to be looking at today is the real estate market. What's happening globally, what's happening in the US. Let's look at a few different things, and we'll get a take from an expert on what he anticipates with this market. CNN Business, what to expect in the housing market this year. Zillow forecasts home prices nationally will decline between 1% and 4% from last June's level. Seeing prices that are staying flat to 1% to 4% down puts us on the more bullish side for price changes of forecasters out there. So they see downwards price action, but They're saying that's bullish compared to what some others are saying. In the Las Vegas housing market, you're seeing the housing market is recalling insanity from the early 80s. People just can't afford these rates. The housing market in Las Vegas is definitely slowing down. The Swedish housing market is plummeting. China's housing market teeters between a boom and bust. Citizens are still willing to pour out life savings into property as long as prices keep going up. So it's not booming, it's not busting, but people are still buying in China. In Manhattan, home prices dropped for the first time since the pandemic. So housing prices are starting to come down in New York. Toronto housing market slumps to record annual price drop. The benchmark is down 8.9% from the prior year's level, and sales slump almost 50%. So Toronto's getting hit hard. So as you see, every market is doing a little bit different. So there's the macro market, and then there's sub-markets within the overall real estate market. It's not just one overall real estate market. You get to see what's going on. In the U.S., sales have slowed down and prices have dropped a little bit, but also one thing to note is that in Florida, for instance, the demand has stayed pretty consistent. Home prices have stayed pretty consistent. So with that, you see that there, depends on where you're at. It's all about supply and demand. Let's hear from an expert. Let's hear from Jeff Booth, and let's hear what he has to say about the real estate market and what he sees.
There's abundance in money. We have to find places to try to get profits, right? And that's primarily been equities and real estate over the last at least decade. And so your house is getting older, arguably maybe needs some work, but it's going up in value because houses are more scarce than the money. Whereas you talk about Bitcoin repricing everything and actually bringing real estate down to the utility value. Can you talk a little bit about that? Because kind of going back to what you said earlier, it's so hard to imagine a world like that.
Yeah. So why do you own a house, right? Why is the primary reason you own a house? And if the primary reason that you own a house is to try to escape the devaluation of a currency, which is a primary reason for most people, effectively they're buying a house because they say, I can pay back the debt in cheaper dollars tomorrow because of inflation. And if I own 2 houses or 3 houses, then I can rent out that and I can essentially sit on top of a system that the person getting poorer because their wages are actually going down are making me rich. And if I'm BlackRock and I can own 1 million houses, I can do it faster. So we own more houses, not because of the utility value. We own more houses because our money is getting worth less and we're going to pay it back in cheaper nominal terms. And so under a different system that Bitcoin, and by the way, this critical in this, we would never vote for the system of Bitcoin through an electoral process. We could never see ourselves voting for our wages coming down over time or our house prices coming down over time. So you can just imagine everyone you talk about, when you talk about the political process, it's we. We would vote those people in that'll tell us, oh no, because we don't see they're two different. We think they're two different things. Our house prices can go up forever, but everything we buy, we want cheaper. We want more value. We don't see that we are labor in every single thing we buy, and so that process on Bitcoin means that houses fall to their utility value when measured in Bitcoin. They will still go up if monetary policy is printing money. It'll still go up in fiat terms, but against Bitcoin, they're going to come down to the utility value.
And there you have it from Jeff Booth. And Jeff is talking about that home prices are going to go back down to the utility value based in Bitcoin price. If you look at it in fiat terms, the price is going to continue to increase over time. In Bitcoin denomination, it's going to give you that true valuation of that home. He's basically stating that Bitcoin will be that asset, that all assets that we've stored value in or that we see value in historically, everything will be priced in Bitcoin terms. And with that, I'm Sean with the Bitcoin Bros. You guys like this content, go ahead and smash the like button. If you haven't subscribed to the channel, go ahead and show us some love. We appreciate the support. With that, that's all I have for you today. I'm out.